Dewan joins us. Let's connect with him. Let's take markets forward. And Neeraj, the markets have been a happy hunting ground for everybody. Where have you been shopping, and what is your incremental strategy going forward?
Yeah, good morning, Nikunj. Yeah, earlier, of course, banking stocks were the private sector banking stocks were looking very attractive. So that is where got a good return. And now I think that even PSU banking, you've seen a couple of small numbers also coming. So there also, I think there is strength which is visible in the balance sheet, in the asset quality. So I think that sector also is one sector which I feel that should do well going ahead. You know, though markets have come up a lot since it touched 22,000, it touched it twice, and I think we have been recommending buying close to those levels. So now, because markets from the bottom, whatever sectors you were talking about, the private sector banks, they moved up from those levels, and now I think now these levels, it's again very stock specific. So you can't be just buying sector specific earlier, like it was at 22,000, 22,500 level. So now one need to be again very careful because the result season is on. We need to look at the results, full year results, next year commentary, and then take a call. It should be very stock specific.
Okay, stock specific, that's the way to go. So Neeraj, what stocks are you looking at? Were you impressed with Reliance's number? The street surely was. The stock is added significant amount to its market cap, above its 200 DMA, and a 5% move. When was the last time we saw that on Reliance intraday?
Yeah, absolutely. After it touched 3,000 before the bonus, so the stock has not really performed till last few days. It started performing. So I think now the stock can go to its 3,000, like 1,500 levels, and it should stabilize at those levels. And the numbers are very good, especially the retail, and Geo has been doing well for them. And retail also contributed significantly, which was a surprise for everyone. I think that's why we saw that kind of a stock reaction. So Reliance should do well even from these levels, because even if you compare it last 6 months, 6 months back, it was higher than this price at 1,500, 1,500 plus. So Reliance definitely should be, if you're holding on to it, you should hold on to Reliance. And besides that, like I mentioned, that PSU banks, then some railway selective stocks, because they had corrected a lot. And infrastructure is one space where I'm positive on. Then there are power sector stocks which have not really done that well over the last 1 year. So that sector also one should look at opportunities there.
Right, okay, that's that on Reliance, and that's quite interesting, the contribution list. It's Reliance, and then of course it's all banks: ICICI Bank, Axis, SBI, HDFC Bank. Rudra, what's looking like a good long right now within the banking pack?
Definitely go with private banks, and it's a choice. First for me, ICICI Bank definitely looks good, and one can definitely buy at current levels or on any dips to that 1,400 strong support zone. And even Kotak and HDFC Bank will be my second and third pick in private bank. But if someone wants to go away from private bank, look at even PSU banks for that matter. Both SBI and Bank of Baroda looks very, very strong to me. And then post PSU banks, if you want to pick up mid-sized bank, then yes, look at stocks like Federal Bank, and even for that matter, RBL Bank. Yesterday, not only the results, in terms of guidance, definitely there was a beat from expectation. And even on chart, there is strong support at 180 for RBL Bank. So first it will be private banks. Second, it will be the PSU banks, where specifically I like SBI and Bank of Baroda. And third option will be look at stocks like Federal Bank and RBL Bank if you want to pick a mid-sized bank.
The big one yesterday, of course, was Mahindra, and that they are to acquire that near about 59% stake in SML Isuzu for 555 crore rupees. They're looking to strengthen their position within the trucks and buses segment. Neeraj, analyze this for us, what it would mean for M&M and what it would mean for the peer group, Tata Motors, case in point.
Actually, M&M, like we've seen also over the last couple of years, have been really performing very well. Their EV segment, their SUV segment, and now they're strengthening their bus segment, bus and truck segment. But even tractors, with the monsoon forecast, should do well for them. So I think they have a very good basket, and I think like Tata Motors, if you compare to Tata Motors, we still have the risk of Jaguar Land Rover, the global risk, the tariff risk, which that kind of a risk is not there in Mahindra to that extent, what it is there for Tata Motors. So whether it's in the four-wheeler space, Mahindra and Mahindra, or in the two-wheeler space, TVS Motor, if you see both these companies, the way they have positioned themselves, the way they're focused, and the way the sales have been growing, margins have been inching up. And even now, if you compare it on valuation front, the stocks are not very expensive. That you don't take them to that very, very expensive category. So with the kind of performance and now they've got the very good deal with SML Suzu. Then Mahindra Mahindra now also should be there in the portfolio. I think it's a good stock to hold on to.
The other stock which is worth revisiting, I think, is SBI. It has done nothing. So you cannot happen that only large cap banks go higher in private space and SBI does nothing. There you go. SBI has got a flat chart. And mind you, that PSU stocks, they will still make money. I mean, they don't have NPA problems. They are looking cheap now. FIs are coming back, but DIs are not selling PSU stocks. I think the risk-reward ratio, Kunal, is now to sell that HDFC Bank, that extra gain which you got in last 3 months, and maybe go back to SBI.
No, in fact, I would slightly differ, Nikunj, because I did a relative comparison chart of the PSU banks versus private banks. Not HDFC Bank versus SBI, but the private sector banking stocks, as a ratio chart, these stocks were huge underperformers. So the ratio charts were almost like a 3-year to 5-year low for private sector banking stocks with respect to PSU banking names. And that's why in the last 3 months, you saw the first signs of private sector banks showing signs of leadership. So the ratio has started to show signs of turnaround. And historically, whenever that has happened, we've seen at least a 20% to 30% plus kind of a jump into these private sector banking names, and the outperformance starts to or stays for at least a period of 1 to 3 years in many cases. So I would believe that what we are seeing right now is a sign of a trend in the making, and that's why you're seeing the resilience also from the banking index at large. SBI has also recovered. I think from sub 700 mark, if I'm not wrong, the stock has recovered 20%. But then when I look at the charts, when I look at the ratio charts of private and the PSU banking stocks, I would still believe that the private sector banking stocks have much more higher headroom to move up.
Okay. Neeraj, what have been your last top 3 purchases and where have you booked some gains in this rally? I mean, in the decline, what did you buy? In the uptick, what are you selling?
Actually, in that tariff turmoil, you saw we got very good correction. So I had recommended also earlier stocks like Mazdog, I recommended stocks like Garware, which had fallen because of the tariff headwind. So these are the stock and there was another Godfrey Phillips because the company was doing very well, and the foreign partner, they had also given they wanted to increase the stake. The stock corrected during the tariff turmoil in early April. So these are the 3 stocks which we had bought at lower prices. I had recommended to my clients, and plus BSC. These 3-4 stocks which have given a decent return over the last 2-3 weeks. So these are the ones which had added during the fall, and which are the ones which booked some profit also.
Right, okay. Just getting back to M&M, and just yesterday, we were trying to analyze what will be the impact of Trump's tariffs on Indian auto exports. Here's Rajesh Ejurikar, ED and CEO at Auto Farm Division at M&M, and his views on the same.
We don't do any auto exports to the US. We do have some tractor exports. I mean, from a standpoint of the impact it has on our India P&L, it's not a big number. Of course, it has some impact on business there, and we have a very strong business there, and our brand has been well established. So by the way, the tractors don't get covered as part of auto. It's in the ag space. So but right now, of course, the 10% is applicable on everything. So it's not a category specific thing. But we have no auto exports to the US. I think Indian auto exports are not high. There is an Indian auto component industry which exports to the US, but Indian auto OEMs, I think close to nothing goes to US. And I think one reason is it's a left-hand drive market, and a lot of the OEMs do the right-hand drive models primarily here is what I believe. But we have no exposure to that. So let's wait and watch.
Such a great point. I never thought through it that US is left-hand drive, India is right-hand drive. Yeah. I mean, in US, if you go, and I've not been there, so I don't know, but I know friends have been there, the steering wheel is on the left-hand side.
Yeah, all of Europe and US.
Yeah. So how will you export? Because in India, when you are making a right into left, it is a change of assembly line.
Yeah.
And it is technically
Unless
possible.
you make for them,
Yeah.
your products cannot work.
Exactly.
Yeah.
So if auto companies are, if markets are, the investors are thinking and markets are thinking, oh my God, right? Auto exports and a tariff is going to have a large impact on auto companies. No. It could have had an impact if auto export numbers were large, and if numbers are so large, the assembly lines can be tweaked. But the numbers are not that large that auto companies would like to tweak the assembly line. It is not just putting steering. It is not like, it is not like a Lego brick that it's a proper assembly line change which actually happens. This I never thought through it. I mean, Indian companies hardly export to US. So even if tariffs come, they don't come, it doesn't matter for Indian auto companies. And the halabud is so wrong.
Yeah, especially the OEMs, why I don't think there is too much of export happening for OEM like Mahindra and Mahindra also, or even any other OEM manufacturer. Even if they have, they'll have a very small part going there. And there is auto ancillary exposure there, that also with 2-3 companies which their names come again and again, whether it's Bharat Forge, Sona BLW, or Motherson Sumi. And then even Motherson Sumi, for that matter, they have a lot coming from Europe, going to Europe also. So the exposure is there, but it's not that alarming for someone to really be scared of, especially as far as the OEM is concerned.
Rudra, is there any scope in Tata Motors? Because when I say scope, I mean, how's that chart looking? Because we've not spoken about Tata Motors in a while. I just get this, looking at the charts, looking at the valuation, looking at the market cap, suddenly Tata Motors is looking cheap to me. Rudra?
Yeah, see, on pure chart reading, Tata Motors looks good for me. Yes, it has bounced from those sharp support zones of around 540, 550 zones. But however, if the downtrend has to end, we have to see that higher top, higher bottom formation, and the resistance for the stock on chart is now at around 720. So for me, yes, only if it closes above that level of 720, 725, then I say the down move is over and definitely more momentum will pick on the upside. But if you give me a blanket choice to pick an auto stock, I will still go for M&M. M&M looks very strong to me on chart, and look at the bounce what M&M had, and it's a 500 rupee bounce from levels closer to the 2400, 450 to now levels closer to 2900, 2950. So relatively for me, charts are more stronger to either M&M, or even for that matter, if I have to go for a two-wheeler kind of a pick in a stock like TVS Motor, chart looks very strong. So given a choice, I will still prefer M&M over Tata Motor. But if you want to be specific on Tata Motor, then watch for those levels of 720, 725 to cross. Then yes, I will agree that the down move is over in Tata Motor.
Right, bunch of other stocks which are going to be in focus. This Coforge, of course, the share purchase agreement with Sapiens UK got announced, and that's going to be a positive trigger perhaps for Coforge. This, of course, has been one of the better performing IT names, along with, of course, KPIT and Persistence. So look out for what this stock does. And then, of course, there's Bharat Forge. Now news reports indicating that Trump plans to ease off on the auto tariffs. So some of these names, like a Bharat Forge, which do have a component manufacturer for Class 8 trucks. So that's going to be the other one, which is also going to be in focus. Other than that, for Paytm, one of their arms has received a GST show cause notice. Oro Pharma, of course, the Andhra operations have been paused for 25 days because of that massive fire. And IndusInd Bank, wherein the Deputy CEO, Arun Khurana, has stepped down. That's the other stock which is also going to be in focus. But just looking at some of these mid-cap IT names, there's of course First Source also, which should be reacting to its numbers. The constant currency revenue guidance has been set at 12 to 15%. So that's going to be the other stock which is going to be in focus. And KPIT, we're going to be chatting with the management in the due course of the show today. No guidance from them. So I think that's something that we're going to be quizzing them on first thing. But Neeraj, how are some of these mid-cap IT niche plays looking to you? And let's keep the large cap lot outside of this, a Persistent, a KPIT, a Coforge.
Yeah, actually, I'm still avoiding buying these, these levels because, the stocks, maybe, performance-wise, you've seen a couple of good numbers also coming from mid-cap IT. Though, short-term bounce backs may happen, but I think they are still expensive. They're not that cheap because if there's any headwind which comes because of US, the stocks are expensive, so there can be some profit taking which may happen in these stocks. So I'm really not looking at buying mid-cap IT even at these levels.
Okay, still avoiding mid-cap IT. The stock yesterday, other than, of course, Reliance, was Maruti. And pretty volatile a ride for Maruti. There was, of course, a one-off in the earnings. The new plant expenses related to Kharkhoda impacted the margins for Maruti. Higher promotional expenses will also likely include Auto Expo, related costs itself as well. So those were some of the negative factors which were impacting Maruti's numbers. But look at how actually Maruti panned out. While it started off down, finally recovered and closed in pretty much around the session highs. Rudra, come into the charts for Maruti and how, or rather where you think it's going to go forward from these 11,850 thereabout levels?
See, no doubt yesterday's move has been more of a short covering rally in Maruti. And for me, on charts, it is very, very clear. Levels closer to the 12,000, 12,100 holds a significant resistance. If you see last 3 months chart, it has been 3 instances where it made an attempt to cross the 12,000, 12,100 from where it has again just fallen down. So if I want to enter fresh on Maruti and if I'm a momentum looking trader, I will wait for 12,000, 12,100 to cross decisively on a closing basis and then take a position on the long side, or else it will remain sideways. On the higher side, yes, the 12,000, 12,100 holds the resistance, and on the lower side, if you see again support will emerge at that 11,400 levels. So right now 11,400 to 12,100 range, let it break and then momentum will come on the direction of break.
Okay. Maruti, of course, saw a massive 3% recovery nearabouts from the session lows, and what a move coming in on that stock. The other news bit, of course, on a macro level is the fact that Reserve Bank of India just last evening announced that they've decided to conduct an OMO purchase auctions of the Government of India securities for an aggregate amount of about almost 1,25,000 crore rupees in 4 tranches. So clearly, the RBI is out there to support the liquidity, all guns blazing. That said, some of the other movers yesterday, of course, other than Reliance, there was BPCL, which is due to report its numbers today. That held out well. There was CDSL, there was HAL, there was RBL Bank. All these names held out very smartly. Neeraj, what happens to the entire defense pack right now? And I'm specifically keeping railways out of the, pack here because we were earlier so accustomed to club defense and railways into one bunch. Till, of course, the correction transpired in the 2 segments. But specifically about defense names, do you think they will come back to the fore? We have seen a fair amount of order inflow in any case coming in. We've seen some of the outperformance sporadically from the likes of some of the shipbuilding names, from a HAL, etc. as well. What do you think should be the treatment for these names now?
Yeah, actually, defense has outperformed because, like I said earlier, also that we had been recommending, when the market had corrected, stocks like Musgor Dock had come to 21, 2200 levels. HAL was available at 38, 3900 rupees. So these stocks from those levels have come up. So I feel that the outperformance may continue for some more time. I think my targets are a little higher. So I booked some profit in Musdock, recommended some profit taking in Musdock, but still holding on to, the significant chunk even in Musdock for clients, and even HAL for that matter. Then there are small stocks also which have been doing well. They're like a Zen Technologies. So they have been doing well, and I think even they should continue doing well. I think there's some outperformance still, and plus, like you rightly said, there is definitely order flow which is coming their way. For shipping specifically, there are further orders expected for the companies like Muldock and Garden Reach Shipping. So I think these, if someone has been able to get into them at lower levels, should hold on to them and ride from these levels to get another upside of about 10-15%.
All right, so let's watch out for the defense counters. But well, of course, these companies and some of the listed players have been doing very well. And the news that we are gathering is that India and France have signed a 63,000 crore rupees deal for 26 Rafale marine fighters under an intergovernment agreement, which also includes setting up of a production facility for Rafale fuselage. Now, delivery of these aircrafts will begin in 2028 and years from the date of contract and will be completed by 2030 with the crew undergoing training in India as well as in France. Let's go across to my colleague Sumita to get us more details on this one. Sumita?
Well, to bolster Indian Navy's capabilities, India and France have signed a 63,000 crore deal for the acquisition of 26 Rafale marine jets. Remember, these are state-of-the-art jets and only France has them. So India, definitely for India, it's a force multiplier for Indian Navy and its capabilities as well. It's a government-to-government deal, and the delivery of these aircraft is going to happen by 2031. But let's understand what else is part of the deal. Like I said, the procurement purchase agreement involves 22 single-seater jets, 4 twin-seater trainers. It also includes fleet maintenance, logistical support, personnel training, and the most important thing is that these jets have been built for India's specific requirements. So definitely a booster shot for Indian Navy's capabilities in these. More than that, it's also a booster shot for India and French ties. It's a step up for bilateral ties between France and India. Remember, the Cabinet Committee on Security gave a go-ahead for the signing of this deal earlier this month, sometime in April first week itself. So definitely, it's a big one coming in as far as India-French ties are concerned. The deal we're given to understand, was signed by officials from both sides, France and India. There was the French ambassador, Dassault Aviation representatives, and of course the Defense Secretary.
Right, okay, that's the latest update coming in right now on defense. In the meantime, just looking at, some of the buzzers from yesterday. RBL Bank, of course, shot up a good 10%, like we earlier highlighted. HAL, CDSL, BPCL, these were all big buzzers in trade. Maruti, like we just addressed, saw big covering, a 3% rebound from the session lows. And Reliance, quite clearly, was the star performer in trade yesterday, the biggest contributor to the Nifty move. Other than that, today, of course, TVS Motors, the conference call has mentioned that they are expecting healthy growth in the international markets, particularly when it comes to Africa. That's going to be the one stock to look out for. There's, of course, Ultratech Cement, wherein the management has guided for a double-digit organic volume growth come FY26. So that's the other stock which is going to be in focus. There's Coforge, wherein one of their arms is looking to sell stake in Coforge Advantage Company to Sapiens UK for about 491 odd crore rupees. That also is sentiment positive for this stock. And then, of course, Adani Green numbers as well came out, along with PNB Housing and Greenply, which were all impressive set of numbers there. But Neeraj, other than IT, what are the pockets that you would somewhat avoid right now where you still think there is uncertainty, either with regards to, perhaps valuations, or for that matter, even growth, given their global linkages?
Yeah, I think there is definitely IT we mentioned, and otherwise, there is again, like I'm very stock specific now. I'm not looking at sectors and looking at buying into sectors. Metals is one space which has global linkages, and there you've seen something like a Tata Steel correcting a lot. You've seen a good correction happening even after that 200-day the import duty announcement. After that also you didn't see any up move happening in metals. So metals, I think, especially the ferrous ones, I think there is still some headwind. There is still not clarity. So even though the stocks have corrected there, I'm not looking at buying into those names. The non-ferrous space, still looking at some opportunities. So there, because again, the stocks had corrected and they've not been able to bounce back smartly like other sectors would have bounced back from lower levels. So this can be another space where one can wait to get some clarity if one needs to buy the dip.
All right, so let's watch out for the metal counters and wait for some more clarity rather to buy on dips. But with this, Neeraj, we let you go on that note. Really appreciate you taking the time out and speaking with us this morning. But with this, viewers, let's move on and let's also get you some of the mid-cap ideas from both of our experts. And Kunal, you go first. Tell us which is the stock within the mid-cap space you are eyeing today.
So I'll go for a buy on ABFRL. That's a chart which is looking attractive. In fact, yesterday's candlestick pattern was more like a bullish engulfing pattern for ABFRL. The stock managed to come back in between the long-term moving averages, the 200 DMA. It's still below those levels, but I would believe after yesterday's candlestick pattern, the stock should show signs of a further up move. 282 as an immediate target. Stop loss could be kept at 270.
All right, ABFRL is the bet coming in from Kunal. But Rudra, what about you?
See, I'm picking a mid-cap kind of a banking name, which is Tamil Nadu Mercantile Bank. Results were exceptional and stock consolidated well, and now it is giving you an opportunity to enter. At current market price, it's a mouth-watering risk-reward trade. One can definitely buy that for your portfolio. At current market price of 445, I will be a buyer in TMB. Look at targets of 500 rupees to come with a very tight stop loss of 435 at current market price.
If you like this video, then like, share and subscribe to ET Now.